Good morning. Our topic for today is the recording process. So in our recording process, it generally includes three basic steps. So what are these basic steps in the recording process? First, we have your identifying and analyzing. The second step is the recording of transaction in the journal. And then the third step is the posting of transaction to the ledger. Okay, so the recording process is composed of three main steps: identifying and analyzing, that is the first step in our accounting cycle. And then we have your recording of transaction in the journal, that is the second step in our accounting cycle. And then we have your posting of transactions to the ledger. This is the third step in our accounting cycle. So before we proceed further on what is recording and what is posting, we first discuss the concept of the double entry system. So what is the double entry system? The double entry system records transactions are recorded in two parts. And what are these parts? The first part is the debit. The second part is the credit. So remember, last meeting, we already discussed the rule of debit and credit. So we said, always remember that debit is the left side and credit is the right side. You do not denote debit as increase and credit as decrease. The increase or decrease follows depending on the element. And how do we determine again whether it will increase or decrease depending on the element? We look at the normal balance. Sir, how can we determine the normal balance? Based on the accounting equation. So whatever is the normal balance, that is the increase. Whatever is the other side of the normal balance, it is the decrease. But debit and credit will still remain as left side and right side. The increase or decrease is only dependent as to the element of the financial statement. So for asset, what is the normal balance again? Left side. Therefore, debit. What is the other side of the normal balance? Right side. Therefore, credit. Okay. Liability. What is the normal balance? Right side. Therefore, to increase, credit. How about the other side of the normal balance? Left side. Therefore, to decrease, debit. Okay, so remember, debit or credit pertains only as to the side. And if ever you want to know how to increase or decrease that element, you need to learn the normal balances of the accounts. Okay, so in a double entry system, we record a transaction in two parts: the debit and credit. Now, under a double entry system, it follows these concepts or these two concepts. So what are the two concepts regarding double entry system? The first concept is the concept of duality. So what is this duality? This duality pertains that each transaction has a twofold effect. Each transaction has a twofold effect. Okay, so what is this twofold effect? The twofold effect of our transaction is it has a value received and value parted with. So you have a value received and value parted with. Further, duality also provides you that at least transactions will be recorded using two accounts. At least every transaction will be recorded using two accounts. Okay, so under the double entry system, we said we use this system to record transactions in two parts, the debit and the credit. And the double entry system has these concepts. The first concept is duality. Under the duality, each transaction has a twofold effect. What is that twofold effect? You will receive and you will part something. Next, at least every transaction will be recorded using two accounts. What are accounts again? Accounts are the basic storage of information, so unit of account. And remember, in your last activity, I required you to research as to different account titles. So that at least when we go later in your recording, we will understand why will we need to use that account or what particular account should we use. Okay, next concept that underlies your double entry system is the concept of equilibrium. So what is this concept of equilibrium? This concept of equilibrium tells you that each transaction must have equal debit or credit. Okay? So we have a twofold effect, value received, value parted with. Value received normally is an increase, and value parted with is the decrease. And take note, we are using two accounts. So we have here account title 1, and account title 2. We have value received that can either be a debit or a credit. Value parted with can either be a debit or a credit. Sir, why do we say that value received can either be a debit or a credit? Because guys, remember, when we say debit or credit, it is based on whether it is an increase. Okay? Debit or credit again, it may be a decrease. It depends on the element. But the debit or credit, remember, only pertains to the side of the accounting equation, while increase or decrease pertains to the normal balances of elements. And you need to harmonize the debit and credit rule together with the normal balances. Okay. So that's how your double entry system works. So we have here a debit or a credit, and we have your accounts using two accounts. At least this is the minimum. You use two accounts. And then there must be equilibrium. The amount on your account title 1 and account title 2 must be equal. So if ever we will place an amount here and an amount here, dapat equal sila. Okay? So we start first. After knowing your double entry system, we go now to the first step of your recording process, and that is your journalizing. And no, identifying okay. So identifying and analyzing. Remember, last meeting we said to identify and to analyze means we look for business transactions that pertains to the business or is an accountable event. So ever since our first meeting, we have already emphasized what is an accountable event. So our business transactions must be an accountable event. So once we know that our business transaction is an accountable event, we go now to the second step, that is the journalizing. So under your journalizing, we will record the accountable events to the journal. And remember, when we say journal, we have your general journal and your special journal. And we said your general journal is used for all other transactions, while special journal is used only for specific transactions. Okay, so under our journal, we have this. This is the normal journal. If ever you will find something or you see this, it is your normal journal. So this is the normal layout of your journal. We have already discussed this last meeting. So we have here your date. This is the date column. And then we have your account titles. And then we have your reference. We also have your debit and your credit. Okay. So of course, your date is the date of transaction. Date of transaction. So let's say the date of transaction happened today, then you place the date today. And then you have your account titles. Your account titles are your different accounts coming from your chart of accounts. So these account titles are based on your accounts in the chart of accounts. So what is the chart of accounts? The chart of accounts is a listing of all account titles. So how does your chart of accounts look? So for example, our company is ABC company, and then we have here chart of accounts. So when we say it is a listing of all account titles, we will only list the account titles. So for example, we have here your different assets. So we have your cash, accounts receivable, and then we have your different liabilities. We have your accounts payable, notes payable, and then we have your equity. So let's say ABC capital, and then we have your different income and your expenses. So we will only list that item. So that's how your chart of accounts look. So in our chart of accounts, we use both the account titles. Your chart of account is composed of the listing of accounts, listing of account titles, and the listing of account numbers. So what are account titles again? These items are account titles. Cash, accounts receivable, accounts payable, notes payable, capital, income, or expenses. So those are account titles. And what is your listing of account numbers? Your listing of account numbers normally in the chart of accounts, before the account title, we have a number. So for example, 101, 110, 120. Let's say this is 210, 220. Okay, so those numbers, these are called account numbers. These are called account numbers. And normally, account numbers is in a three-number format. Three-number format. The first digit is the element. So for example, number 1, number 2, that is the first digit of those accounts. So it pertains to elements. So for example, 1, you assign asset. 2, you assign liability. 3, you assign equity. And then 7, you assign expenses. 9, you assign income. Okay, so it depends on how you will assign the account numbers. So it depends on you if you want it to be number 9 or number 7, or you start first with number 3, or you start first with number 5. It depends, but always take note, the first digit denotes the element. So here we say that the number 1 is for asset and number 2 is for the liability. The second digit is the particular account. Particular account. So here we have, let's say, 110 cash. So 1 pertains to cash itself. Okay, so asset, and the second one is cash. Sir, how about the third digit? What is the use of the third digit? Third digit normally signifies whether it is a contra account or adjunct account. Sir, what is a contra account or an adjunct account? A contra account decreases the main account. So, sir, what are the examples of contra account? So your contra accounts examples are, we have your allowance for doubtful accounts, discount on note payable, what else? You have your accumulated depreciation. So these accounts are contra account. So what about an adjunct account? If a contra account decreases the main account, an adjunct account increases the main account. So, for example, premium on bonds payable, premium on bonds payable. So this increases the main account. So for example, we have 111. 1 again represents the element. The second digit represents the main account. And the third digit represents whether it is a contra or adjunct account. Contra if it decreases the main account, and adjunct if increases the main account. Okay, so that's for account titles. Next, we have your reference. So again, what do we place here in our reference? The item we place in our reference is your the account number once it is posted in the ledger. This represents the account number once the journal is posted in the ledger. Okay. Sometimes this reference is known as your posting reference. And debit and credit, of course, we place here the amount of the journal entry. So again, our journal entry, just a quick recap, our journal entry is based on the double entry accounting system in which we have a debit and a credit. We have at least account title 1 and account title 2. Because again, we said that in our duality concept, there must be at least 2 accounts. Okay. And then under our equilibrium, the debit and credit must be equal. This is under the concept of equilibrium. Now, guys, you might ask me, sir, is there a possibility that the journal entry is more than 2, or the journal entry is composed of more than 2 accounts? So the first question is, can there be a business transaction that contains more than 2 journal entry? And the second question is, can a journal entry contain more than 2 accounts? Okay, so remember our discussion a while back, we said that your accounts or your journal entry under your double entry system must have at least 2 accounts, must have at least 2 accounts. Therefore, it can have more than 2 accounts. So here we have the concept of at least the types of journal entry. Types of journal entry. So it can be a simple journal entry, a simple journal entry, or a compound entry. So what is a simple journal entry? A simple journal entry only includes 2 accounts, while compound entries contains 3 or more accounts. How about the first question? Can a business transaction contain more than 2 journal entry? The answer is yes. The answer is yes. So, for example, purchase, ano, sold materials for 50 pesos. The cost of the materials is 30. So you try to associate the cost and effect on that particular business transaction. So you have a sale at 50, the cost is 30. So first there is a sale. So you debit cash, credit sale, 50. And there is the cost. So if there is a cost, you need to record the cost. So debit cost, credit, merchandise, inventory, 30. Okay. So it is only one transaction. However, we associated the cost and effect of the transaction. That's why we made 2 entries. Okay. So again, can there be a business transaction that has more than 2 journal entries or at least 2 journal entries? Yes. In a journal entry, can there be more than 2 accounts? The answer is yes, because your journal entry can either be a simple or a compound entry. A simple entry only needs 2 accounts, while a compound entry needs 3, at least 3 or more accounts. Okay, so guys, I hope you already familiarize yourself with the different account titles and the use of those account titles. We go now to your posting. So what is the process of your posting? So we said when we say posting, we are already transferring the data, transfer the data recorded in the journal to the ledger. Okay, so under your posting, we use this format. We use this format, and we call it your 3 money column format. So what is the format of a ledger? We said we have your 3 money column format. 3 money column format. So we have here your, so this will be your account title. And then we have here your account number. Account title and your account number. So first you have your date. And then we have your explanation. We have your reference. We have your debit, your credit, and your balance. So why is it known as your 3 money column format? Because we have here your debit, your credit, and your balance. Your debit, your credit, and your balance. Okay. So, of course, on the date, you place here the date of transaction. On the explanation part, you just provide a brief explanation. You just provide a brief explanation. Your reference here is the page in the journal. Page in the journal. So a journal contains normally a page. So for example, you are using general journal. General journal. And then the transaction is found in page 23. Okay? So if you try to pause the transaction that is found in page 23, you first place the date and the explanation, and the reference is the page in the journal. So let's say it is found in the general journal in page 23, you place here GJ23. GJ23. That is for general journal page 23. How about if ever you can see it in your special journal? So if ever that is a special journal, as much as possible, you provide reference on different types of special journal. So let's say we have your cash disbursement journal, and then you found it on page 24. So you place CD24 or CDJ24. It depends on your coding. But again, what's the use of that reference? This shows that that particular transaction is found in the journal at a particular page. So if ever it is found in the general journal, page 23, you place your GJ23 or G23 or J23, whatever is your coding. If it's found in special journal, let's say cash disbursement journal under page 24, then you place your page 24. So CDJ24 or cash disbursement 24 or CD24. Basta the reference is used to indicate the page in the journal and what is the journal in which you can find that particular transaction. So your debit, again, is your debit account. Your credit is your credit account. And your balance is the running balance. Running balance of the transaction. Right? So running balance of the transactions, particularly pertaining to your account title. So sir, how do we compute for the running balance? So let's say we have an asset. So if the asset, the normal balance is debit, di ba? Normal balance is debit. Other side is credit. So the debit represents increase, the credit represents decrease. So for example, if we have an asset here, so this is the debit, the credit, and the balance. So let's see, first transaction is 30,000. This is 15,000. And then the third transaction gives you 4,000. So if we try to compute the balance, you have 30,000, 0 credits. So this is 30,000 because debit is positive. And then we have your 15,000 credit. For an asset, credit is negative. So 30 less 15, 15,000. 30 less 15, 15,000. Now we have the third transaction, which is a debit. Debit is positive. Therefore, 15 plus 4,000, 19,000. Okay? That's how you will compute the running balance. You just follow whether it is a debit or a credit as to its normal balance or the other side. If the normal balance increase, if the amount is placed on the other side, it is decrease. How about if that is a liability? What is the normal balance of the liability and what is the other side? The normal balance of the liability is your credit. So we will increase it during credits and then we will decrease during debits. So assuming we have these different transactions. So 1, we have 30, 15,000, and then 4,000. Okay, so since this is a liability, we have here a debit of 30,000. Debit represents negative. So our balance is negative 30,000. Next, liability, we have here a credit. So 30,000, credit is plus. So negative 30,000 plus 15,000. So you will get negative 15,000. And then we have another debit, which is a debit of 4,000. So negative 4,000. And then we have negative 15,000. So negative 15 plus negative 4 will give you negative 19. So we have here negative 19,000. Okay, so that's how you will compute your balances in the ledger. So again, just follow whether it has the normal balance or the other side. Normal balance is increase, other side is decrease. Normal balance is increase, other side is decrease. Now, guys, We have another type of e-ledger. However, this is not actually a ledger. This is not actually a ledger, but for sure for the ABM graduates, you are using this one during your ABM years. So normally, they say that a T account is e-ledger. T account is e-ledger. So actually, no, because the ledger is the three-money column ledger. So this big letter T is only known as your T account. So what is your T account? Here we have your account title. We have your account title. And then we have here your debit and your credit. Later, you will just compute the balance. Okay? Later, you will just compute the balance. Guys, take note, if ever I require you to compute for or to prepare a requirement using a ledger, please use the three-money column ledger. If ever I require you to prepare a ledger, or let's say pause to the ledger, you use a three-money column ledger. But if ever I said pause the transactions to the T account, then use the T account. So how about your T account? How does it work? So you just need to total the debit and your credit, and you get the balance. You just need to total the debit and the credit, and you get the balance. Okay, so let's extend further our discussion to the preparation of the unadjusted trial balance. So under the preparation of unadjusted trial balance, what did we say before? In the preparation of your unadjusted trial balance, we will just list all the accounts, including their balances from the ledger. Okay? And take note, the total of the debit later should equal the total credit. The total of the debit should equal the total credit. Okay, so let's now have an example regarding your recording process in which we utilize your activity last meeting. We utilize your activity last meeting.